Hello and welcome to the Fintech Finance Virtual. I'm your host, Doug Mackenzie, and on today's session we're going to be evaluating the bank of the future, looking at all the digital trends and really the changing role of a bank going forward. And joining me, I have two guests who are right at the heart of this subject material. We have David McHenry from the Silicon Valley Bank and also Michael Haney from Technisys. Guys, thank you so much for joining me here today. I hope you're well. To kick things off, I'm actually going to ask you guys to intro yourself to our viewers so they know really a bit about you and your organization. So, David, as someone that's been on the show before, could you give our viewers a bit of background to yourself and your role at Silicon Valley Bank, please?
Yeah, definitely. No, great to be here, Doug. Always great to chat with you guys. From my perspective, gosh, I've been in banking close to over 20 years now. Hyper-focused on cash management and payments. I've worked within correspondent banking, government banking, and then I got the just great experience to work in the kind of the tech banking atmosphere with Silicon Valley Bank. And I manage a team of sales advisors working with our tech and life sciences and our funds banking clients out of SVB's UK branch, covering the UK, Europe, and our Israel teams. And we focus on things like cards and strategic deposits and payments. And, a little more about SVB for those who might not know, we really view ourselves as the global bank of the innovation economy. And we support tech, life sciences, all the innovators within venture capital and private equity at all life stages, from inception all the way going global and becoming public, and do that in a number of different ways. And we've done it for, close to 40 years at this point.
Incredible. Well, David, I'm so happy to have you on this panel because we are going to be looking at all those innovative side of things on the finance industry as well. So it's absolutely brilliant to have your expertise in that. And also, Michael, thank you so much for joining as well. How are you doing?
I'm doing well, Doug. Thank you very much. It's a pleasure to be here today and speak with you all.
Amazing.
My name is Mike Haney, as Doug alluded to, and I've spent actually most of my career at large multinational institutions, including Citibank in New York and Tokyo, Barclays Bank out in London, and lastly UBS Bank out in Zurich, Switzerland. So I've had the pleasure of seeing banking around the globe in Europe, Asia, and North America. The remainder of my career has been in software and services, but always focused on the banking and wealth management industries. And most recently, about a year ago, I joined Technisys. So for those of you who don't know Technisys, it's a firm which has come out of Latin America, specifically Buenos Aires, Argentina. And as part of their global expansion, they've moved about a year and a half ago into North America. And I was brought on as part of that team to help with our North American expansion. Specifically, I run a business line that we call Digital Core, which of course includes our core banking solution. And then of course, we also have a front-end digital engagement platform that we call Cyberbank Digital, which my colleague runs that business line. So looking forward to the insights that we can share with you all today.
Definitely. It sounds like such a kind of worldwide enterprise, and really ultimately, I think what we're going to be touching on is going to have an impact on banking wherever you are in the world. But I'm really excited to hear those insights, guys. Now, if I could stick with you, then coming from that incumbent side of things, they need to adapt to survive, and I think that's known. But what are the various industry trends that are maybe driving this change?
Yeah, we typically look at the big three. Of course, it all starts with the customer. As the customer's needs change, as their behavior changes, this often ends up being the most important factor driving change at financial institutions. Obviously, as a highly regulated industry, whatever the regulators do around the globe can impact how banks change and how they need to change. And then lastly, of course, is the competition. And competition isn't limited to your fellow banks anymore. It's coming from all over the place. And I hope we can dive into some of these trends here on the call today.
Yeah, and I think that's so interesting. And David, could I also get your perspective on that as well? You're obviously looking at that external kind of competition. It's no longer, you're not banking against another bank. You've got the tech giants coming in as well, right?
Yeah, absolutely. I mean, it's happening at such pace. We always say that, yesterday was the day that you saw, the least amount of innovation that you're going to see going forward, that every day going forward, it's only going to increase. So, we see it from our standpoint. We're lucky enough with just an amazing set of clients who are driving and growing and doing a lot of these things that we're talking about. And, we see from a competitive standpoint, there is, just as Michael said, it's these upstarts, hyper-focused platforms that are growing and they're scaling rapidly. You also have other FIs that are growing and iterating on that. And all that really continues to evolve. Like it's the need of the clients is growing ever rapidly. Competition is growing rapidly. Regulation, just as Michael said, is ever more complex. And being a bank, we end up being probably the closest to the regulation. I think we're probably going to talk on that a little bit, but that is both a stick and a carrot. What drives a lot of our innovation, it also makes us cast our eyes on a certain amount of development of what we can do and how we're able to grow from there. Interesting.
Now, I think, speaking of growth, the finance industry is not known for its ability to adapt or maybe innovate, if I was to be a bit harsh on it. Now, if we were to dive into maybe one of the trends that are forcing that to change is maybe customer behavior. Is that true for the retail side and also the business side? If I could come to you, Michael, and kind of see, how much customer behavior is maybe driving this change to become a bit more adaptable and innovate.
Yeah, I think, digital technology has obviously enabled customers in a way that they've never had before. Access to functionality, access to data, on a mobile device. So now, obviously the mobile phone itself is a device you can take with you anywhere. So we no longer are limited to where and when we can do banking. And of course, now I think mobile device is going to slowly over time start being supplemented by other ways of interacting with your bank, with smart speakers and smart watches and integrating banking into all points of customer, where customers actually need banking to be, which is at the point of need. So, they've been spoiled by other industries, right? I mean, everyone talks about the Uberization of the industry and how it permeates into other industries, this sort of expectation that everything is on demand and instantaneous. But I think most importantly, it's going to be the data that drives customer behavior going forward. Banks are no longer just transaction processing corporations. They're no longer centered around the financial product itself. It's about how can I provide you insights into your financial health? How can I provide you with actionable data that you can use to achieve your goals, meet your needs, and ultimately improve your financial health as a whole. And so banking becomes an enabler rather than just something that you need to do as part of your life.
Interesting. Now, David, in such a regulated industry, what are the challenges that come around from trying to innovate like these other industries that we've talked about, these really customer-focused industries that are able to take these big leaps? How can finance change to that speed?
Yeah, I mean, as I kind of touch on, regulation ends up being central. When you're a regulated financial institution, whether you have a banking license or an e-money license, or even, here in the UK and in Europe, third-party processor licenses that are out there right now. Like that regulation is your baseline, that's your qualifier, that's what is kind of core, your ticket to keep doing the thing and serving your clients. What is good about the regulation is that, as I think I said, it can be a stick and a carrot. It drives us in terms of there is great innovation that comes out of regulation. There are things that get addressed, things like PSD2 and things like open banking that potentially could have evolved on their own, but the regulation put it in a framework, it put it into deadlines and gates of when we could do it, and it gives us something where we can pick the right way to build something, which is going to be, adhere more to industry standards instead of we go down one path and build one thing, and then all of a sudden a couple banks are building their own thing, and then it actually becomes much harder for a client to get baseline capabilities because things become walled gardens. So, the regulation allows us to do that. It also puts up, really great things to protect clients, protect retail clients, protect businesses, things like that we have to build into our process and build into our platforms and make sure that we're adhering to. It can be a challenge when that has to happen all the time, and that can take some of your gaze away from what maybe is the new shiny thing, and you want to go and build this and do maybe a mad science project and build that thing. We don't get the chance to do that as much. Our biggest challenge as financial institutions is finding the best way to balance this type of development, because you had the question earlier about banks not being known for being agile. Well, we've dealt with waterfalls and that type of development. We've never been known more. Like, we actually have a lot of great technology banks and financial institutions have rolled out. We just unfortunately haven't been able to operate in kind of a Moore's law, where every 18 months we're going to double our capacity or double our innovation the same way digital tech companies do.
Yeah, I was just going to touch it. I find the whole regulatory aspect in financial services quite interesting, because I don't think that there's always two things that help you succeed or fail in this industry. One is an understanding of risk, and one is an understanding of regulatory. And I think, what I find fascinating is when you look at other markets, like let's say the UK or Singapore, there's much more of a collaboration between the banks and the financial regulators. There's also fewer financial regulators in some of these smaller markets. So we always look from the US, we always kind of look out and say, well, what is happening kind of in the future when we look at some of these countries like UK or Singapore. In the US, given its size, the complexity of the regulatory environment, there's so many different regulators, they don't always agree. And this sort of more general attitude of let the market drive organically, how things will innovate. So I find the US to be often more of a fast follower than a leader when it comes to, some of these aspects. And we're still kind of going through that painful transition of regulating by financial product, which has created, unnatural silos within the larger financial institutions, and it's finally moving to more of a customer-centric approach. Where we're looking at things like fairness and those other aspects about protecting the customer. And then the other thing that's obviously been a big pivot, particularly since 9/11, is this focus that the banks will play a role in stopping various forms of financial crimes. So, the governments around the world have basically asked banks, you will get involved with terrorist financing, anti-money laundering, tax evasion, and so on, which is not something they always ask of companies in other industries. So in some ways, the regulators expect the banks to be an extension of themselves, the financial crimes sort of enforcement arm, which really drives a lot of cost and complexity in the financial institutions. And it will be really interesting to see how some of the neobanks and challenger banks meet that challenge as well.
Yeah, and I think that's a really interesting kind of point into something that I find very, 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 very topical, and it's the changing role of a bank. If we look to what the bank will be in the future, you've mentioned it's going to be far more customer focused. So, Michael, if I could stick with you, then let's expand on a few of those attributes that you've provided. We've got customer focus. We've also got having the rule of law, and also being that moral right of anti-money laundering. But when it comes to combining that, how is the bank's role evolving? How can they improve on all these points, much in the same way that a tech company could?
Oh yeah, I think some of the things that the fintechs and the challenger banks have taught us is how to focus on the customer experience. Start with that customer journey. Make it as simple as possible, have it be data-driven. And we have now, we measure this now, both incumbent banks as well as fintechs. There's a direct connection between that customer experience and factors like customer satisfaction and customer loyalty. Everybody measures CSAT and NPS and all these things now. And we know that the more you focus on the customer and improve his or her experience, you will have increased loyalty and retention, which of course will help drive revenue and profits in the long run. And so, the banks are learning not only from other industries, but from the competition that they have now in the financial services industry. And as we talked about, that competition isn't just fintechs anymore. Big techs, the Apples, the Googles, the Amazons are starting to play a little bit in this space. And the more that financial services becomes embedded in non-banking brands, that will also help drive what the customer experience should look like in the future.
Yeah. Now, with that in mind, it's really brilliant to hear this changing role and to say, we need to be more customer focused. But then, David, how do you actually go about improving customer experience, improving customer engagement in financial products? What do you actually need to provide as a product to achieve that?
Exactly. Well, to really drive customer engagement, it is that idea of making data influenced decisions, which it sounds kind of funny. You're talking about client engagement and you're, thinking about a very cold way of looking at data and driving your UI and your UX and your go-to-market strategy about that. But that's absolutely when we talk about iterative development and picking, the right way that a client would expect to work with your financial institution, it gets down to that. At SVB, I think we have a fantastic engagement model in terms of how we go to market, how we support early stage companies and growing companies and multinationals and their investors. And we have the things like NPS scores that we aim at. When we talk about product development, we also sit on so much data of what are click-through rates, what are challenges, what are failures, what's happening on our platform, and how are we polling our clients to get that insight to be able to take that and make these derived decisions about what do we prioritize, what can we streamline, what can we enhance, what are new areas that actually clients are looking at these types of financial platforms that they want to use, so that we're building the right integration interaction with those going into the future. So making the pretty screens and that UI and UX and having that journey, that's core. That's, whether it was walking into a branch and having the right signage and having the right feel of who came up to you and how they, spoke to you, or how you interacted with the bank online and then in their mobile banking, that's core. But actually picking the right things to develop and devise and to prioritize is all based on data. And that's something that banks are doing a better job of. Maybe sat on data in the past that we didn't use as well, but that's what's going to be our success in the future, is using that.
And I think what's also interesting is that data is teaching us that the traditional financial products are insufficient to meet the specific customer goals and needs. And so we are, the traditional sort of checking, savings, personal loan, or in David's world, various cash management and treasury types of services, it puts too much burden on the client to figure out, based on what I want to achieve or what I want to do, which of these financial products should I be using? It sounds silly to say, but, the mapping of a payment, a checking account to the fact that your cash flow as an individual, you're not able to stretch your paycheck for the full 2 weeks or whatever your paycheck cycle looks like. And so we're now seeing what we at Technisys call combination products, where we assemble products, various deposit, lending, and payment products into a capability that actually addresses a specific customer need. So if you are, let's say, a gig economy worker and your earnings are volatile, or you're a low income worker and maybe your paycheck doesn't stretch, that's why early pay and early wage access are really taking hold in the industry, because that's a means by which a bank can address your specific need by combining a deposit, a lending, and a payment product into one thing. Or buy now, pay later. There's a reason why buy now, pay later has taken off so much. It's because that simple need of, I want to buy this product, but I don't have enough money to pay for it in one go. What's a simple way to spread the payments out? And so, buy now, pay later has taken over the industry. But again, it's a combination of a payment, checking, and loan product to create that buy now, pay later experience. And we can start listing all kinds of things. And when you look at the fintechs, they start with that. What's the customer need? And what's the combination of traditional banking products and services that meet that need? As opposed to, well, here's a checking account, what can you do with that? Or here's a personal loan, what can you do with that? So it kind of takes that burden away from the customer to understand how banking can enable his life.
Yeah, and I think you've kind of hit on a really interesting point there, in the fact that a lot of financial service products are slightly discreet. You don't actively, often, just a typical banking customer doesn't think, oh, I need to get this product from my bank. now we're starting to see through embedded finance people actively making and buying financial products they didn't even realize that they ever needed or wanted, and now that they're having them, they're actually getting that. Now, if I could then stick with you then, Michael, and kind of look at this concept of embedded finance, and obviously the API technology that's been behind that, kind of enabling banks to integrate themselves into various different apps, or vice versa, actually, sorry. How is that going to change the way that people view banking?
That's right. So banking as a service is a concept by which banks can sort of decompose the different products and services that they offer into more granular attributes, and then expose them via an API. Where they were sending that first was often a fintech, right? Another sort of challenger bank, if you will, that didn't have a banking license. So they were sort of the Intel inside, right, powering those fintechs. But what we're seeing now is that these APIs can be exposed to any company in any industry to embed finance in what they do. Not only does it help those companies create retention and loyalty among their customers, because they're able to provide better, more smooth experiences. A simple example is at the checkout on a merchant website. But it also allows them to provide more products and services to their end customer. So by embedding finance into other industries' apps or other industries' websites, you're not only creating new revenue streams for the bank behind the scenes, but you're also creating more positive customer experiences at those. So these could be retailers like Walmart or Amazon. These could be in travel and hospitality industry like Marriott or United. You can imagine these APIs being pointed to almost any industry that requires a smoother journey to help facilitate what they do for their end customers. So we're starting to see these APIs used beyond just the fintechs and used across multiple industries and multiple companies as well.
Interesting. Now, with that in mind, then, David, we've just been discussing the kind of changing role of a bank, the changing technology behind the bank, and also the huge amounts of changing customer demand from their bank. Now, would you say that there is a gap for a very traditional bank to actually start offering up this new model of banking in the market? And realistically, what's the kind of journey to get to that situation? That sounds almost like you have to start again from scratch, surely, when it comes to the typical bank's legacy systems.
Yeah, well, it's one of those, I don't know if you quite call it a gap right now, because it's not like, I think a bank is looking at like, oh, there's a whole nother set of clients that I don't know about, I've never been able to get to, that's out there, that there's this gap and this chasm that I've never been able to jump through. No, those clients 2 years ago, 5 years ago, 10 years ago, those were their core clients. They're moving ahead. Their platforms, what they expect out of a financial institution, or more importantly, what they expect around the solutions for managing their money or making their payments or conducting their life, those have changed. So, I think there has been, lots of banks throughout it. There's global banks, there's regional banks, specialty banks, there's building societies, credit unions. If we just think about those financial institutions that all approach the market and solutions differently for whoever their addressable market was. Whether it was branch banking in the high street or putting it in a supermarket, building a great online banking system, but then moving it into great mobile capabilities. More and more, we've had these, but those are, we kind of, stuck online banking on top of a core platform, and branch banking stayed the way it is. Now you're seeing, as Michael was saying, these embedded finance options and these banking as a service that, clients want these experiential things. And the way, banks have been built, it's batch processing, it's older infrastructure. I talk to clients, we've always talked to clients on the commercial side about integrations. They want to integrate with their platform. Well, yeah, it was Swift integrations and it was direct transmission integrations. And now, yes, we absolutely talk about API integrations. It's still kind of the same thing, but that technology is more nimble, it's more able, it hits all the buzzwords of real-time, embedded, simple, layered architecture, being able to build in partnerships. That's what that architecture does. And so it is a big piece now of financial institutions where, it's not just slapping on that layer, because you're not going to get everything underneath it to be real time, to be fully embedded, to be actionable, and all these things if you're just putting on that integration layer that's just an API. We do have to build it much deeper. And, that's all financial institutions right now are in some type of very large core change, whether it's their payment platforms, their digital platforms, their core processing and lending platforms. All of that's happening. It's being rationalized and it's prioritized right now.
Yeah, now speaking of that priority then, Michael, how does a bank's organizational agility kind of factor into the future of banking, if we were to follow on from David there with a follow-up question?
Yeah, and that's absolutely another lesson learned from the fintechs and the challenger banks, is that agility counts. And it's a little painful for some of the incumbent banks to sort of reorganize around some of these more agile methodologies that you would see at a newer company, a Silicon Valley style company, of which many of the fintechs are. And how do you start moving your CapEx cost base to your OpEx cost base? A lot of these agile models allow you to do that. How do you think about continuous change rather than these big massive projects which begin and end and have to follow the internal bank's budgeting cycles? So they have to think about how they're organized. They have to think about how the tech stack can help them. Does their technology actually enable agility? Obviously a lot of modern technology has built in things like DevOps and other capabilities that facilitate continuous integration, continuous development type of concepts. And what's most interesting, especially in the incumbent banks, is they have these very large departments like finance, risk, legal, et cetera, compliance, who aren't used at all to working in these fashions. So even if you get your digital team or your broader technology team to start moving in this direction, you still have to pull in these various support functions within a bank who just simply aren't set up often to adopt sort of agile techniques. Everyone who's worked for a bank has encountered their legal department. I'll get back to you in 6 weeks, and that type of things. How do you shift some of that? You need their whatever consent or signature on the requirements document or whatever you need, and they're not necessarily set up to move in that sort of agile way. So you have to look at it organizationally. What are the incentives to move, the tech stack, and then all these sort of supporting functions that you need to become agile as well. So it's a tough journey, but it is doable. And I think that the fintechs are kind of showing us that you can build a bank from scratch and build it from agile from the beginning, and the larger banks will adapt as well.
Yeah, well, with that adaptation in mind then, David, would it, if we were to start wrapping up then and kind of look at that kind of talent and role to try and pivot to that new kind of way that banks operate, would it be fair to say that now we have that customer demand, now that we have that kind of agile way of working, that the CTO is kind of at the core of all this, the CIO, and really what should they be looking at in the future when it comes to kind of being able to pivot into this new kind of era of banking?
Yeah, no, I mean, I think the core to it is the digital revamp of a bank, whether it's our bank or other banks that are happening there. So, the CIO, CTO, or chief product officer, wherever it may sit in the organization, is looking at that. When they think about it, they're not just building on the outskirts of the new solutions that sit out there. It's going much deeper, and we all know, I think, like as I said before, we are having those rationalization conversations that go all the way to the foundational technologies of the organization, to make it more nimble and build to those. So it is something that those things have been talked about for the last 10 or 15 years easily throughout my career, and it goes back 20 years. It had been talking about core banking changes and things like that. When are we going to get to more real, especially coming from the US, when can we get to more real-time core banking things? If we're talking about like that core technology, that actually is finally starting to happen in the US a lot more, much more real-time when you're looking across the world, especially now being here, UK and Europe, like it was much more real-time processing. But at the same time, those old core banking platforms don't offer, the techno jargon of microservices and things like that we get into that, we need to do that, and how are you rationalizing that technology? So that is definitely part and parcel of what we have to do, and at the same time embrace not just our own product development, but that idea of, we were talking about APIs and things like that, embracing partnerships much more to bring those platforms to our clients, the platforms that our clients want to use, that embed our great services that we've been utilizing for years and years, but give them, actually breathe a bit new life, give them more integration, allow that, do that, with our FX, we do that with Cantox to give dynamic hedging. We've taken some of our transmission technology and worked with the likes of Modern Treasury in the US to put API and really unique wrappers around that, taking our awesome virtual card product and working with a company like TeamPay in the US to actually have a great front-end platform that clients want to use that embeds virtual cards into platforms like Slack. Like, those are things that we're not going to iteratively get a chance to work on all of those across all of our products, but our partnerships and that type of infrastructure that we have built and are building even more of is getting to that point. And that's what I think the product development and technology officers have to continue to focus on more financial institutions.
It's kind of an unfair task, isn't it? It's like everyone expects the bank of the future to kind of be able to do everything from being a bank, but also being a tech company, and ultimately no one company can do that, no matter how big the bank is. So it's really interesting, and to kind of seeing that changing role in finance. Now, guys, I think we're coming to time, so I always like to kind of to wrap it up with a kind of like a throw out, call out, and so I kind of see where you guys are going to be heading. So I mean, if I could hand it over to Michael, can you give our viewers a bit of can you let us know what you guys are going to be working on in the future, and where people can find you on social as well?
Sure. Yeah. So again, our company is called Technisys. So we're at technisys.com, and you can also, of course, find us on all the social media outlets under that same name. We're really a software company that wants to enable a lot of the trends that we've been discussing today. So looking at it from a core banking perspective, how can we have a very lightweight core that reduces a lot of the operational costs of the bank, that allows them to get to those underserved segments in a cost-effective manner. A core that also allows us to build some of those combination products and unique experiences that we were talking about that really address the customer needs. A core that can provide data to do all those actionable insights that we discussed. And a core that enables, embedded finance, right? So that banking as a service becomes easy for our banking and fintech clients, and they can embed themselves wherever they need to be, or more importantly, wherever their customers have that point of need. So we're really, focusing about taking our software products and continuing to evolve it in ways that our banking clients can move into that future state that we've been discussing today. And of course, we'll continue to grow geographically as well.
Brilliant. It sounds like world domination's next. So excellent. And also, David, also thank you so much for joining in. I don't know if how much you can reveal, but what's next for SVB and this new ecosystem we've been talking about?
Yeah, definitely. I mean, you can always find out more about Silicon Valley Bank at svb.com, and then we're out on all the social channels also, and hearing also about some of our great clients that we can talk about when we're out there. I mean, from SVB's perspective, we have been and are growing by leaps and bounds. Our things that are out there. We're growing our commercial bank. We've grown our private banking platform in the U.S. We're going through an acquisition right now, of another financial institution that's going to build out that platform even more. We've expanded our SVB Capital arm, which is our investment venture capital vehicle that's adding on lots of great stuff, both for raising funds and deploying them, both for equity and debt funds. That's really going from strength to strength. And, also, again, growing globally on our side too, which has been, building out our UK presence much more, and our capabilities here, growing into places like Germany and into Canada, our joint venture bank in China. And so it's been all around those pieces of growth. And with all that, it's then, it's not just those big chunks. We're also really focused on client experience for our early stage clients, building out a digital banking experience for them that they expect more and more, and then being able to give the products and solutions as they grow, that, growth stage all the way up to corporate finance and going global, that they would expect at any other large financial institution, because that's who, we're in that field.
Yeah.
So we're really excited about all of that.
Well, that sounds absolutely incredible. Guys, thank you so much for your time. It's been so insightful, and it's so exciting hearing, just as a consumer of banking products, hearing this changing role, hearing how much more customer focused it's going to be, and also all the hard work that goes on behind the scenes. So guys, I hope you've enjoyed yourselves as well. I certainly have too. So thank you very much. And also to our viewers, I should shout out as well, you can catch the rest of the series and much more over at www.fintechf.com, and of course YouTube and LinkedIn, where I'll see you in the comments. So guys, once again, thank you very much and goodbye.
Thank you, Doug. Thank you, David.
Thanks, Doug. Thanks, everybody.